What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks again to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification button as well. That way you are alerted when we release new videos. We do release bonus content from time to time. Now, the nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from, scalps and intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up the charts with the broadening formations, levels of support and resistance, things of that nature, make sure you check out that bonus content on our YouTube page. It's got a couple of videos that dive deeper into that for you. If you want a free PDF quick reference guide for the STRAT, which is the base of our trading method, check out the description in this video. It has a link to a free PDF for you there. So I do encourage you to watch the full video. We do go over triggers and targets for tomorrow and the week and things like that, but we do give some insight into all time frames. So let's go ahead and take a look at the agenda for today's video. We'll go ahead and recap the price action from Tuesday, January 20th. Then we'll zoom out like we always do, look at the week, month, quarter, and year. Then we'll zoom back in to set the 4-hour markers for tomorrow, as well as the triggers and targets for Wednesday, January 21st, along with a review of the targets and triggers and targets for the week, month, quarter, and year as well. So just getting into the chart in the 5-minute, on the 5-minute chart, like we normally start out with, this is how we take advantage of our proven and repeatable strategy, either to get early scalps in the morning or to get early entries into longer term day trades that we get a good trend from. Today was a little bit opposite, had to use a little bit of nuance, right? We had to look at where we were opening in comparison to Friday's price action, also in comparison to the overnight price action, right? So we had a pretty big push down overnight off of geopolitical news, whatever, and we did we didn't quite open at the low, at the overnight low, but we opened pretty close to the overnight low. So within the gap from I believe it was last Wednesday, Thursday overnight, slightly in there, but basically on the top of the gap, and from there we kind of took off. You could got your higher low here, right? So we did go ahead and enter into some calls, but we didn't enter in too heavy because we recognized that the 1 hour was already in a downtrend, just a slight downtrend, and it had just started, but it was in a downtrend, and we wanted to make sure that was reversed before we jumped in too heavy, right? There's still plenty of room to put in a lower high, on the 1 hour, and continue to push down, right? So we did get the higher low here. We went ahead and entered calls once we broke above the high of this 2 down. Obviously got the higher low. Once we hit overnight high, that's where the proven and repeatable strategy comes into play. We did go ahead and release a majority of our position at this level, right? Because it was basically make or break at this level for the lower high on the 1 hour. We'll take a look at that here in a second. But we went ahead and unloaded about 80% of the position, hoping for previous high a day, right? That's the second target. Once you get that higher low at or above the opening print, we ended up getting a lower high, right? Now, equal low, lower high, consolidation, but we're recognizing, hey, we can't get past this this overnight high that we're running into, and there's more than likely going to be somewhat of a pullback, if not to create a higher low on like the 15-minute chart. If we weren't going to do that, then obviously we're going to fall into that 1 hour downtrend and have a lower push down, right? So we did go ahead and we hung on to the runners that we had. Oops, get this straight. We hung on to the runners that we had, but as soon as we made this 2 down right here, where we broke below the low of this lower high, we went ahead and entered calls for next week. That position we did kind of load up on because, right, we're falling into the 1 hour downtrend. We entered those. We ended up exiting the the rest of those runners that we had, once we made this lower high here, basically this bearish engulfing candle, like, okay, we're gonna see more downside. So we did get a little bit of profit off of those last ones, but most of our profit to the upside, we got rid of at the overnight high. And then we were able to ride these puts down, getting these lower highs. We did exit at the top of the gap, half of our position, and then we held the rest of it overnight. Right now, that those expired next Friday, and they're really hedges against the February positions that we have. They're not straight up hedges. Obviously we're already quite green on the February calls, but kind of protecting against further downside. It will allow us to get out of those calls if need be and still continue to make profit to the downside with those puts. Or if we get that reversal, the higher low on the 4 hour or something like that, we can go ahead and exit the puts and continue riding the calls back to the upside. So today we did get a little bit of profit to the upside and downside. Obviously didn't get the full upside move because right out of the gate we just shot up there. Unless you were on the 1 minute, even if there was on the 1 minute, I'm not sure that there was a higher low within that 5 minute candle. Yeah, if you jumped in right at open, congratulations. Hopefully your IV wasn't too high. When you open with a gap down like this, IV tends to be through the roof on options contracts. Not so much the calls, but the puts. I'm sorry, not so much the puts, but the calls. People looking for the bounce, so that IV is pretty high there. So hopefully you didn't, you were able to still get pretty good profit without getting any type of IV crush or anything like that. So obviously, right, option profit to the upside, more profit to the downside, and we maintain that 1 hour downtrend. Now, talking about that 1 hour downtrend, let's go ahead and bring out tomorrow 1 hour. And oops, this is what we want to look at here. Why do I not have it? Interesting. I must have removed it. Let's go ahead and draw it in here. Again, we don't put too much weight into downtrend or uptrend lines themselves, but when they intersect with our horizontal lines that mean more to us, then obviously we pay a little bit more attention. But again, oops, there we go. We held just because there wasn't really any crossing of the horizontal levels from like some type of Fibonacci or something. It was just previous high a day essentially, and this 1 hour downtrend we're crossing over. So that's why we still held some of those calls as runners, but we were just aware that we could put in that lower high. Almost got that equal high, but we did put in that lower high and we pushed back to the downside. That's why we continued to that's why we entered the puts, and you can see here just barely we made a lower low. So we do have the lower high, lower low, continuing the downtrend. So even if we do get a push up in the morning on Wednesday, still got to be kind of cautious about how heavy you go into calls, because we are in that downtrend on the 1 hour. Plenty of room to put in a lower high on the 1 hour. If we look at the 4 hour, we're not quite in a downtrend yet. Right, we're obviously coming from, oops, let's get a cleaner chart out here. There we go. Coming from a higher high, so obviously you can't have a downtrend when coming from a higher high. But if we do, go 2 up tomorrow morning, Wednesday morning, depending on when you're watching this, that's still plenty of room to put in that lower high. We've got this daily broadening formation coming through here that we weren't able to put a higher low above to really cement as being beaten. So we have still yet to beat this daily broadening formation. So it's still an opportunity for, if we get that 2 up in that first 4 hour candle of Wednesday's price action, we could reject at that daily broadening formation and continue to push back down. So yeah, that's what we got from the 1 hour and the 4 hour. Again, 1 hour is in a downtrend, and we need to watch to make sure the 4 hour doesn't slide into one as well. On the day chart, all right, obviously we got the 2 down, inverted hammer, but it was green. We closed higher than we opened, and this could be what we consider in the strat world a Momo shooter or a momentum shooter. We'll have to see what happens in tomorrow's price action. If we do get the 2 up tomorrow, Then obviously we're just putting in this higher low on the day, leaving this gap here to be filled at a later time, and going back to press this monthly broadening formation again. This green solid line right there, that's a monthly broadening formation that we're trying to push above. So that's what we have from the day's perspective. Not the worst thing in the world. Yes, we did have a big drop overnight. We did open with a slight gap down, but chips are still relatively strong in comparison to the rest of the market, right? I think the Qs were down 2.5% today. So we're just holding strong with chips. We got to see if chips will help turn over big tech overall around, or if chips are just a laggard in this move to the downside, right? If the chips are just the last thing to go in that tech sector before we get that bigger pullback. And we've had a great run so far this year. Just looking at the day chart, right? This is January 2nd, and we've just gone basically straight up, right? Up a little bit of pullback just for that higher low, a little bit of pullback for a higher low, and just continue to shoot higher. So do we see that higher low here and continue to shoot higher? Possibly, but if not, it's not the end of the world. We can close this gap, still make a higher low somewhere around here. Even if we make that equal low, not necessarily the worst thing in the world either. Look at it more as consolidation. And from the day and 4 hour perspective, if we make a lower low, again, we're coming from a higher high. So now we're just looking at a broadening formation, right? So again, there's just another sign of consolidation at that point. So just kind of digesting this move that we've already made at the beginning of the year. No big deal. If we zoom out a little bit more and take a look at the week, we got an inside week so far. But again, if we just bring this down here a little bit, look at since April 7th. For anyone who's not familiar with this channel, doesn't watch, if you're familiar, we've gone over this plenty of times, but here's the April low. We've got a bull flag here, right? Here's the flag pull. Here's the flag. We have the breakout from there, the consolidation, a little bit more volatile consolidation than we had back here in October. I'm sorry, was it July through October? A little bit more volatility. But again, testing the 2024's 50% level multiple times, major resistance, and finally breaking above it. So a pullback to this $50, $47, $46 level wouldn't be the worst thing in the world either. Even closing this gap here at 43.8 would probably be pretty constructive as long as we get a bounce, right? Because then we're turning what was resistance into now support, right? If we get that bounce. So pullback isn't the worst thing in the world. Quite frankly, I would welcome it with open arms. Obviously our leaps and contracts for February and beyond are doing well. So a little bit of intraday or overnight swing type of plays to the downside are definitely what I'm looking at. Again, not getting into predictions. We just set up our triggers and targets and go with whichever way price goes. But we've got the inverted hammer so far this week. We're sitting right at the middle of price action for the previous week after multiple weeks going to the upside. If we get a pullback, not that big of a deal. Same thing on the month. Excuse me. We're still doing quite well on the month, right? Going 2 up this month, locked in November as a higher low, and we've gone higher than October's high. So we've got the higher high, so higher low, higher high. We're in an uptrend on the month. Not too much to worry about there. Looking at the quarter, if you're familiar with this channel, again, what I'm going to say here. We're still in this one combo 2 down, combo 2 up reversal. Again, magnitude of that move is not the high of the one, but the high of the candle to the left of the one. So 70.08 is that magic number that we're striving for there. Again, got to break through this monthly broadening formation that's coming through here. But if we're able to do that, obviously 70.08 is the target, and then 74. What was it? 74. Oops, come on, work with me, think or swim. 74.21. I'm sorry. Is the all-time high, and we're just looking at all-time high territories after that, or blue sky territories after reaching all-time high. So again, don't want to get too far ahead of our skis. We could always hit that 70.08 and just turn right back around to push down and make some type of higher low here, just to really lock in this uptrend, because we are coming from a lower low in that trend sequence on the quarter. So again, a pullback wouldn't be the worst thing in the world. And on the year, we've triggered this 2 down, 2 up right? Magnitude of that move being the high of the candle to the left of the 2 down. So again, 70.08 is that level. So right now, that's just what we're looking for. Got to play the short-term volatility that we're running into right now. But you know, if we continue, you know, in the what should follow for the strat, you know, 70.08 should be that number that we reach at some point this year. All right. So now that we've looked at zoomed out and we've looked at the days price action, zoomed out and looked at that price action. Let's go ahead and zoom back in and look at our proven and repeatable strategy for tomorrow. For tomorrow's price action. As you can see on the chart, I've got where is our? Do I not have the right chart up? Yep, that's our scalp chart. Where's the previous? Oh, okay. Yeah, I can see why I'm getting mixed up there. There we go. So we have, for those of you who are not familiar with our, you know, trading style, especially early in the morning, we have our previous low a day, overnight low. Obviously, overnight low could change. Overnight high, obviously that could change, and then previous high a day. Those are the 4 main levels that we need coming into the open on Wednesday. And then once price opens, then we mark that, right? And those are our 5 4-hour markers that we talk about. So let's just say price opens somewhere in the middle of overnight high, overnight low. All right, now at that point, we've got previous high a day, overnight high, opening print, right? That's what we're just calling it, opening print, the first traded price of the day, overnight low, and previous low a day. All right, so if you're not familiar with it, the strategy, simple strategy is look for higher lows at or above this opening print level to get into calls. If you do get into calls, you're looking to target overnight high and previous high a day. All right. You know, if we open and we push to the downside, maybe we bounce off an overnight low and we push back up, but we get some type of lower high on like the 15, 5, 15, something like that. And we get that lower high and we push back down. You want to obviously look to get into puts, targeting first overnight low, previous low a day. And that's the very simple strategy that you can use for a very high percentage for trading. Right now, obviously you can take losses, but if you keep your risk to reward ratio in check, you know, 2.5, 3 to 1, then you overall you're gonna win, right? And quite frankly, there's not a lot of times that it does go the opposite way, right? So you just want to keep in mind, you know, while we are looking at that, you do want to keep in mind, you know, overall trends from like a 1 hour, 4 hour perspective as well. You know, are you going to be fighting the trend if you do get a call above opening print? If so, then maybe overnight high is all you really want to look for. Maybe you release half your position there and you know, maybe to see if we can push higher, but if we don't resolve that level and start to push lower, go ahead and get rid of that as well, right? That's where the kind of the nuance comes into play. But as far as entries, you should always get a great entry if you're just watching for that higher low at or above opening print to get into calls, or that lower high at or below opening print to get into puts. All right, let's go to a chart to look at more of a longer day trade, possible overnight swing. We'll go ahead and pull up the 4 hour chart, and we can see obviously we've still got the gap below from, what was this, Thursday morning, in between Wednesday and Thursday. We have the gap, overnight gap, and you know, today's price action left us with a failed 2 down and then a 2 down hammer, right? So while 2 down, right, going 2 down and having a significant pullback from the highs on Thursday and Friday, it wasn't that bearish of a day, right? It was kind of neutral, right? You get a failed 2 down, right? So it's a green inverted hammer. So again, closing above where you opened, but then you get a red 2 down, but it's a hammer. So, you know, bulls had their chance, bears had their chance. We're just kind of hanging out. So we've got to see what will happen tomorrow. If that first 4 hour candle of Wednesday's price action goes to the upside and we trigger a 2 up, that gives us obviously a 2 down, 2 up, entering at the high of the second 4 hour candle from Tuesday and targeting the high of the first 4 hour candle from Tuesday. So 2 up triggers at right here, and we will exit right here. Well, that is a point of exit, right? That's where the strat would be complete. Now, if we do go above that level, that does trigger this one combo 2 down, 2 up, kind of like what we're on the quarter chart. And again, the magnitude of that move is not the high of the 1, but the candle to the left of the 1. So If we get a good catalyst or momentum gets going, maybe even a squeeze, we get that momentum going to the upside, we complete that strat, and we're into the next strat, right? That's the only combo that we would have at that point, because we're looking at highs for this, shorter period of time. Obviously there's highs further to the left, but at that point, 62.19 would probably be the level that you would expect to see sideways action, if not a little bit of pressure to the downside, at least intraday, right? We can obviously go 2 up on the week and continue pushing up just like we did the previous week and the week before, but it wouldn't be surprising to see what we call corrective activity around that 62.19 level, right? It's last week's high. It's the completion of this one combo 2 down 2 up strat. There's this monthly broadening formation right here as well. So that may be where things, peter out at the end of the day, and then we have to wait for overnight to maybe gap up over the broadening formation and whatnot, or at least build up more momentum overnight before opening Thursday to push up past that broadening formation, right? So there is a little bit of a domino type of action that can happen to the upside. If we do go to the downside, then obviously we've got the gap below, right? So we went ahead and tested last week's 50% level. We talk about this every week, how at some point during the week that level is tested, and it's the reaction from that level that usually dictates how the rest of the week will go. So we want to see, we came down in here, we sat on it today. Do we break through and continue to push down? Do we poke through and get some support and bounce from there? Or do we just continue to sit on that level and move sideways, right? That's what we're looking at tomorrow. If we do go to the downside on the first 4 hour of Wednesday's price action, that gives us a 2 down continuation. And then we're looking for obviously half gap initially, right? We've talked about many times in the past how intraday half gap can be a bounce point, and many times is. We've shown plenty of examples where it is. So first targeting the halfway point of that gap. If we reach it with some momentum, then obviously we're going to be targeting the bottom there, the bottom of that gap, which does coincide pretty closely with the market maker's expected move low down here at 55.03. If you're not familiar with the market maker's expected move low, make sure to check out our Friday or weekend videos where we dive into that a little bit deeper. But you can see how those levels do kind of coincide there, right? So look for the gap close, and then maybe this is where you start getting a little bit of sideways action as well. If we're talking about downside, maybe losing a bit of momentum by the end of the day. But a gap close can obviously build momentum. So if we do come through here with some momentum, look out, market makers expected move low. We're probably going to be going and testing last week's low. Do we do it tomorrow? Maybe not. But say goodbye to market makers expected move low if we're blast through that gap with some momentum, right? Now on the day chart, let's get something here a little bit cleaner. If we're looking at the day chart, right, then to the upside, we would have a 2 down, 2 up reversal. Very clear entry at the high of Tuesday's price action, very clear exit at the high of Friday's price action. Again, coinciding with this monthly broadening formation. So expect to see a little bit of sideways action, at least intraday, until it's decided by the bulls or bears if we're going to continue to push up or not. But don't expect to see just something blast through that broadening formation. We've shown how that in the past is a pretty good source of resistance, right? It usually takes a few tries to get through that. Now, if we go to the downside, again, we're filling that gap, and if we do trigger the 2 down on the day, then that gives us this combo 2 up, combo 2 down, and we're not just looking at the gap fill or market makers expected move low. We're looking at the low of the 2. That is to the left of the 2 up in that combo 2 up, 2 down strat reversal, right? So that's down here at 53 flat, right? So again, that would give us a place to maybe get an equal low on the day chart. Maybe we bounce from there. But again, even if we go past this low and we make a lower low, we're coming from a higher high. So we're just creating a broadening formation for ourselves up here. All right. Let's go ahead and switch to the notes real quick so we can look at the numbers here. Again, this is for Wednesday, January 21st. On Wednesday, there will be 239 trading days left in 2026, and the close price on Tuesday was $57.94. We know that price opened this week at 57.34. So for the week to go red, we would have to go below that level. And for the month, quarter, and year to go red, we would have to go below this 45.13 level. We know the market maker's expected move for the week is plus or minus $5.72 from the close of Friday's price, which gives us a range of 66.47 to 55.03. We know that we've got a small gap still left above from 62.19 to 62.23, but then we know where all the gaps are below as well. We know from a scalping perspective, we're looking for higher lows at or above the opening print level to get into calls, or we're looking for lower highs at or below opening print to get into puts. We talked about on the 4-hour chart, if we go to the downside, we're getting this two down continuation, triggering at 57.22 and giving us targets of 56.35 and 55.44. If we go to the upside, we're getting that two down, two up reversal, triggering at 57.82, magnitude being 61.05. But we do know that we are in this 1-hour downtrend, which is why we put these intermediate targets here. If we don't make it up to that 61.05, look at 59.84 or 60.42 as possible points of reversal or just sideways action, right? Now, if we go to the downside on the day chart, again, that's triggering this combo 2 up, combo 2 down at 57.22. The magnitude for that move is all the way down at 53, and although we're in the 1-hour downtrend, we're still in a 1 week, 1 day uptrend, 4-hour uptrend as well. So we may not make it all the way down to that magnitude of 53 flat. So we've got 55.44 and 54.28 as our intermediate targets if we do get that push down. So watch for either a bounce at those levels or some sideways action. Now, if we go to the upside on the day chart, we get that 2 down, 2 up, triggering at 61.05. Magnitude being 62.19, so not the largest magnitude in the world, but if we do push through that level with some good momentum, then we've got 63.32 and 64.75 as our extended targets. Now on the week, we're still an inside week. We haven't gone 2 up or 2 down. 52.35 to go 2 down on the week, and 62.19 to go 2 up on the week. If we go to the downside, we've got a reversal. So very clear entry and very clear exit. If we go to the upside, it's just a continuation. So we've got the 62.19 as that trigger, and we've just put that 62.23 as an initial target just because it's a gap close. You just got to leave it out there. But if we do get past that, then we've got 65.04 and 66.76 as our targets. We talked about on the month, we have run this 2-1-2 up strat. Triggered at 50.09, reached this magnitude of 50.19. Obviously, we're at 57.94, so we're just continuing to push for these extended targets. On the quarter, we've talked about how we triggered that 1 combo 2 down, combo 2 up. We have not quite reached these targets on the way to the 70.08 magnitude, but these are the levels that we want to look for before seeing maybe a possible pullback or sideways action to digest another move to the upside before actually reaching that 70.08 magnitude. And on the year, again, we triggered that 2 down, 2 up at 50.76, and the magnitude of that move is 70.08 as well. We reached that. Obviously, all-time high 74.21 is the next target, and then we'll start talking about blue sky territory targets if we start to get into that territory, I guess we can call it. But anyways, that is your list of triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Hope everybody enjoyed this video. We try to cram in as much information as possible without taking up too much of your time. So the only thing we ask is that you give us a free thumbs up if you have made it this far. If you made it this far, it's for some reason, I hope. But thumbs up goes a long way in helping this channel grow. We're not a monetized channel. We're not looking to get monetized, but we do want to reach as many people as we can. It's kind of just try and help out as many people as we can type of thing, and we're happy with that because we've got plenty of other things going on. We don't need to be YouTube stars. We just want to make sure that we're helping out as many people as possible. So again, if you've made it this far, go ahead and give it a thumbs up. We really appreciate it. We'll go ahead and wrap up the video right like we do each time. If you're watching this Tuesday night, we hope you get some good rest tonight, wake up refreshed tomorrow, ready to trade. If you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night and woke up ready to trade today, and we look forward to getting out there and trading with you.